Welcome back to Cow Guy Close. I'm Scott Bauer in for the Cow Guy who's on assignment. I've been a trader for a very long time, almost 35 years, and charts are my thing. When I look at a chart of corn, I see the prices literally almost smack dab in the middle of the range for what we've seen over the last decade. It's now almost down 40% from where it was a year ago. But that's the trader's insight. What does this mean for farmers, and how will the crazy weather patterns that we've had affect the upcoming harvest? I can't think of anyone better to get insights from than Tommy Grisafi. I really appreciate you being here, Tommy. How are you doing?
I'm doing well. Good to be here, my friend. And there is no shortage of subjects to talk about with corn. So I don't know how long we have, but I promise I'll fill this segment well. So we're in a big market, but the one thing we have to understand is that the American farmer has been blessed to have great prices for multiple years. Now, you, like myself, young guys who grew up in the industry at the Board of Trade, typical great bull markets in the grains sometimes last weeks. Sometimes you hear about, it's a soybean meal-led rally, and it's been a good 6 months. We are going on multiple years of elevated grain prices. And there's a lot when you talk about a higher price, it doesn't always necessarily mean massive profitability. When you have things, as you know so well, labor's been an issue. The price of fertilizer last year exploded, and sometimes your bushels are down. Maybe the price of the market's up, but we have a drought or hot weather like we're experiencing today throughout the whole country. And this tends to be a problem and something we have to deal with. But I can tell you this from my own personal, as Scott likes to say, in my mom's basement here, that farmers are starting to realize that the good times aren't going to last forever. I had a farmer call me from the Bettendorf area, Bettendorf, Iowa, Quad Cities, and he called and said, "Hey, I think I need to start doing something. I haven't used the tools of the market because the price has been so robust, but I need to buy some insurance." And I know you're so involved in markets and teaching and being a great educator like you are, that we need to continue to say, we need to educate. And I'll hand this back off to you. But operating notes next year in agriculture are going to be at 8, 9, 10, 11%, the highest interest rates in 22 years. You're either making 5% in a CD or you're storing grain that could be depreciating and paying interest. What do you think, Scott?
Well, so in addition to that conundrum, which again, that's something that farmers haven't seen in quite a long time. In addition to that, you mentioned the weather. We're going through a drought. We're going through this excessive heat. I mean, really excessive heat. We've got the harvest just around the corner, a couple months away here. How are farmers preparing for that? And as you said, what do they do to maybe take out some insurance in case, God forbid, something really catastrophic happens to the crop?
Right. Life is what happens when you're making other plans. So there's a couple things they can do. They can, one, get a cash sale, an actual forward sale, call a grain elevator, call an end user, call an ethanol plant, get some sales on the books. They're more than welcome to do that. They can call us or they can do it themselves. As you know, you don't need a broker to trade an option, but we like to help and educate. They can set that floor by buying a put. We do recommend, though, Scott, if they do make that cash sale, we'd like some call or call spread ownership. So if they want to get aggressively sold, we want to own it back on paper via the Board of Trade options. If they're scared to get forward sold because for whatever reason, there's a lot of different reasons, we want to buy a put and set that floor underneath.
No, I appreciate that. And just for some of our viewers that may not understand the difference between calls and puts, calls gives someone, the owner, the right to buy whatever commodity, whatever asset that is at a price sometime in the future. Puts are the opposite. Puts allow someone to sell at a certain price sometime in the future. So the insurance you're talking about could be some put buying, or with that cash sale you're talking about, you're suggesting that the farmers really would still want to have some upside protection in case the price did rally. Is that what I'm getting at?
Right. So as long as the Putin's got the red phone over there, and the red phone, they're not calling Tommy and Scott before they start blowing up ports over the weekend. Now, the last way this grain can get through the Ukraine is the trains. Yes, absolutely. This is a new era and we need to use these tools and options. So cash sales, we always say the word futures and options, and compliance likes us to say this. Remember to stay fair and balanced. But I will tell you this, my friend, and all the viewers and watchers, if there's something keeping you up at night, you need to do something to lay off that risk.
Boy, those are words that you must live by. And, that's the way that I have traded throughout my entire career, being fairly on the neutral side. And always, I wanted to go to bed at night, quite frankly, saying, okay, what if that happens? Am I going to be okay tomorrow? So I think that is a great way to look at things. And as you said, I'm not sure how many farmers, how many are really taking advantage of the derivatives that are out there to either lock in prices or put some caps, put some stops in. Certainly something that I would be looking at, and I know that you're in that camp, and they should probably contact you guys. But with the upcoming harvest, what do you expect given the weather that we've had over the last 6 weeks, 8 weeks?
Yeah, great question. I expect continued volatility with the turbulence happening in the Ukraine war, more volatility. Big move in the dollar today, big move anytime we have a Fed meeting. Interest rates are exploding today when you look at the bond market. I expect no matter what, whether the crop's a good yield or a bad yield, that you're going to have to manage the risk of the bushels on your farm, not your neighbor's farm, not what's going on 100 miles away in the Twitter sphere. But I do expect that we've had enough good weather to produce a decent corn crop here in America.
Thank you so much, and a lot of people are going to be real happy to hear that. Thank you. Now it's time for the Cow Guy's favorite part of the show. Let's dial up that cow phone. From Rich in Iowa. Hey, Cow Guy, I always enjoy the big smile when you dial up the cow phone. The only other time I see that smile is when the Dow is down, not the cow, and crude oil is up. I bet you're a lousy poker player. Well, Rich, Scott's not much of a gambler, except for maybe, the cigar and whiskey part of it. But we did ask him to respond, and he said, wow, you've nailed his narrative. That made him happy. From Britt in Nevada. I don't know much about cows other than that they're tasty. The Cow Guy jacket, that pattern, is it a specific breed of cow? Well, Britt, I'm no cow expert either, but I can tell you that aside from the fringe and the rhinestones and all that bling that you see there, Scott's jacket is the Holstein pattern. Holsteins are dairy cows, and the pattern is a tribute to the dairy farm that Scott grew up on. And finally, from Carl in Texas, we've experienced the effect of algos on the stock market. What will be the effect when AI gets involved? That is a great question, Carl. That's a loaded question and an excellent one. And honestly, the answer is anyone's guess. It could be algos on steroids. You could see a bit more volatility on a day-to-day basis, but overall trading patterns, I believe, should stay the same. And now I want to hear from you. Be honest. Give me the good, the bad, and the ugly. I told producer Ashley I have thick skin and I can handle it. See you later, everybody. Thank you for joining.